Hello, and welcome back to the channel. I'm Algabot, your guide to automated trading strategies on MetaTrader 5. Today we're breaking down an expert advisor called Double Tap Reversal. This one is a pure price action strategy, which means it uses no indicators at all. No moving averages, no relative strength index, no Bollinger Bands. It reads nothing but raw candle highs and lows to hunt for the classic double top and double bottom reversal. By the end of this video, you'll understand exactly how it spots these patterns, how it enters, and how it manages risk. Let's dive in. So what exactly does this expert advisor do? Double tap reversal is a swing reversal strategy built entirely from price action. There is genuinely no indicator under the hood. Every decision it makes comes from reading the highs, lows, opens, and closes of finished candles. The core idea is what traders call the double tap. When price drives into a level, fails, pulls back, then drives into that very same level a second time and fails again, that level has been defended twice. The market has shown it cannot break through, and a large pool of traders betting on continuation are now trapped on the wrong side. The strategy builds the pattern from confirmed swing pivots. A swing low is a candle whose low is the strict lowest point over a set number of bars on each side, and a swing high is the mirror of that. Because the pivot only counts once it has enough bars to its right, these levels never repaint. A double bottom forms when the two most recent confirmed swing lows sit at roughly the same price. A double top forms when the two most recent swing highs match. The peak or valley between the two taps becomes what we call the neckline. The trigger is the neckline break. For a long, the strategy waits for a candle to close decisively above the neckline of a double bottom. For a short, it waits for a close below the neckline of a double top. That break is the moment the trapped side is forced to cover. Who is this suited for? Traders who like clean, structural setups on liquid markets. The default playground is a foreign exchange major or a metal, such as euro, dollar, pound, dollar, or gold, on the 30-minute or 1-hour chart. Remember, this is for educational purposes only and is not financial advice. Let's walk through the exact logic step by step. On every newly closed bar, the expert advisor rebuilds its list of confirmed swing pivots. A center bar qualifies as a swing only when it is the strict extreme over the chosen number of bars on each side. Those right-hand bars are what guarantee the level cannot repaint later. For a long trade, the strategy detects the two most recent confirmed swing lows. These are the two taps. They must be separated by at least one bar, so there is a real peak between them. That peak, the highest high of the bars between the two taps, becomes the neckline. The EA then measures the pattern height, which is the distance from the neckline down to the average of the two taps. Now comes the equality test, and this is clever because it uses no point or pip math. The price gap between the two taps must be smaller than a fraction of the pattern height. That makes the pattern scale-free, so it adapts to any symbol or time frame automatically. If the taps are close enough, they count as the same level. The entry trigger is the neckline break. The EA signals a buy only when the just closed candle closes strictly above the neckline for the first time, while the previous candle was still at or below it. It also checks that the second tap is recent, no older than the maximum break bar setting, so stale patterns are ignored. Risk management is fully structural. The stop loss is placed just below both tap lows, buffered by a small fraction of the pattern height. The logic here is elegant. If price pushes a third time through that level, the double pattern is invalidated, so the trade should be closed. The take profit is set as a fixed reward-to-risk multiple of that structural stop distance, letting the reversal run. The short side is a perfect mirror. The EA detects two matching swing highs, draws the neckline as the lowest low between them, waits for a candle to close below that neckline for the first time, places the stop above both highs, and projects the target downward. Let's watch the strategy work through a full cycle. On the left, price falls and prints its first swing low right at the green support line near 1.0810. That's our first tap. Price bounces up to form a peak, and the blue line marks the neckline of the developing double bottom. Then price rolls over and falls a second time, tapping the very same support level again. Two confirmed swing lows at the same price, separated by a real peak, give us a textbook double bottom. Now watch the eighth candle. It closes strictly above the blue neckline for the first time. That is the trigger. The buy entry fires, and the structural stop sits just below the twin taps. Price then rallies, and by the 10th candle it reaches the take profit, a fixed reward multiple above the risk. The long trade is complete. The strategy doesn't stop there. Price keeps climbing and prints a swing high right at the red resistance line near 1.0906. That's the first tap of a possible double top. Price pulls back to the gray neckline, then pushes up a second time, tapping the same resistance again. Two matching swing highs confirm the M-top. On the 14th candle, price closes decisively below the gray neckline for the first time. The sell entry triggers, with the stop placed just above the twin highs. Price then drops, and by the final candle it hits the downside take profit. There you have it, both a long and a short, each driven by the same simple rule: 2 taps at one level, then a clean neckline break. This illustration is for educational purposes only. Let's go through the settings you can adjust. The first is PivotLeftRight, defaulting to 3. This sets how many bars must sit on each side of a candle for it to count as a confirmed swing pivot. A higher value finds bigger, more significant swings, but fewer of them. A lower value reacts faster, but picks up more noise. Next is EqualTolerance, defaulting to 0.20. This decides how close the 2 taps must be to count as the same level, measured as a fraction of the pattern height. A tighter tolerance demands a cleaner, more symmetrical double pattern, while a looser one accepts sloppier taps. Max break bars, defaulting to 8, controls freshness. The neckline break must happen within this many bars of the second tap. If you raise it, older patterns can still trigger. Lower it, and only the most recent setups qualify. Stop buffer frac, defaulting to 0.10, adds padding to the stop beyond the twin taps, again as a fraction of the pattern height. A larger buffer gives the trade more breathing room, but widens your risk. Reward ratio, defaulting to 2, sets the take profit distance as a multiple of the structural stop distance. At 2, the target is twice the risk. Raise it for bigger runners, lower it for quicker, more frequent exits. Lots, defaulting to 0.10, is simply the fixed trade size. Always size this responsibly for your account. Finally, Magic, defaulting to 9301, is the unique identifier the EA stamps on its trades so it can manage only its own positions. Tune these on a demo account first. And that wraps up our breakdown of the Double Tap Reversal Expert Advisor. We covered how it spots double tops and double bottoms using nothing but raw price action, how it confirms swing pivots that never repaint, how it enters on the neckline break, and how its structural stop and reward-based target manage every trade. Remember, everything in this video is educational content only and is not financial advice. If you found it helpful, please hit that like button, subscribe for more MetaTrader 5 strategy analyses, and drop a comment telling me which EA you'd like me to break down next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.